Okay, hello, Coran. Hello, guys. I'm really happy that, Coran, you're here with us and can tell us more about how to evaluate, how to sell Amazon business. So I will do a short introduction.
Sure.
Coran is one of the speakers on Amazon Forum 2018. He was doing a huge speech about how to evaluate Amazon business, how to sell it, how to sell it for more money. Coran is doing FBA like brokerage, so he's a FBA broker, FBA business broker. So he sells and buys Amazon businesses and help buyers to find sellers and basically sell the business. And he's doing a really, really good job. And I heard a lot of good things about Coran and from our community and from other communities. So thank you one more time for being here with us.
Great. Thanks for having me, Igor.
If you have something to add about what you're doing, because I'm not perfect in introducing people, you can add it.
Sure. Okay, cool. Yeah, just a couple more things I'd add is that I myself, Coran Woodmas, founder and managing partner at thefbabroker.com. Before I started out as a broker, I was actually buying and selling digital assets myself as a private investor. So I have the background of buying and selling, and then I saw the trend coming while I was working at another brokerage that buyers particularly were interested in brands that were selling through Amazon. And that's where this whole thing started. We've been doing this for 2 years now. And we also put out a monthly report and now a weekly report on all the market data. So what's listed, what's sold each and every week. We're actually reporting on this. So yeah, the whole market, not just our own deals. So yeah, quite a bit of experience in this space.
So basically, if I want to know what kind of businesses are like for sale over there, like on the market, I can go to your website and download the report and see what kind of businesses are selling and such things like that, right?
Yes, exactly. Exactly.
Great. Give me 1 second. I'm just checking out on our live video and I still cannot find it for some reason.
Maybe we're talking to ourselves.
Could be. Okay, let's assume that everything is perfect, but I still cannot see the comments.
Okay.
I'm just checking out with my assistant. Yeah, he's saying that everything is fine. So we compiled like most popular questions about how the businesses evaluate and when to sell it. So let's start with those questions. So basically the first question is, when is the perfect time to sell the business?
Sure. So unfortunately, there isn't one answer for this question, and it really depends on the business that you've built and also what your goals are when it comes to what value you would be happy selling the business for. There is a typical trend that I see that is pretty standard across the industry. So typically in the first year of starting to sell on Amazon, you're finding products that are selling well, you create a brand, you launch those products, you find something that works, and then, so that's year one, is just proving out what works. Second year is typically expanding upon what works, so that's growing the business. And year 3 and year 4 are typically where you reach a point of enough traction in that business. You're maybe doing seven figures in revenue, you're bringing in good net profit. Now you can start to optimize for sale. And so the two things, the biggest thing I see as people try to do is, as they're expanding rapidly, growing the business rapidly, they also try to sell. And that's a mistake most times, because it's really tough to optimize for fast growth and expand the business and also optimize for net profit, which we'll talk a lot about today. So that's typically the timeline that we see, is really between 2 and 4 years is the ideal time to sell a business. Obviously more if you're wanting a larger exit, or if you're aggressively growing the business.
If you're talking about like market wise, about sellers and buyers of this kind of businesses. How do you see the overall picture? Is it trend going up, so buyers are more interested in this kind of businesses, or it's like steady or going down?
Yes, so that really depends on the price point of the list price of the business. So right now we're tracking 240 odd listings for sales, so that's 240 individual businesses for sale worldwide, amongst 60 brokers and marketplaces. So there's a lot of inventory on the market. However, most of that is under the 500,000 list price range, about 60% of those businesses. What we're seeing under $500,000 right now is it being very much a buyer's market, which means that buyers have a lot of choice and they can obviously make whatever offer they want. If you don't accept, they'll move on to the next business. So under the $500,000 right now, we're seeing the sell-through rate. So of businesses that list, only about 25 to 30% of these businesses are actually selling through. So at the lower level, it's definitely a buyer's market and it's getting harder to sell the business. And overall, what we're seeing of the ones that do sell, the multiples are actually decreasing compared to 2 years ago when we first started focusing on this marketplace. However, on the flip side, above the 1 million mark, so say you're listing a business for 1 million to 5 million range, the multiples are actually increasing. The sell-through rate is much higher, about 50%, and that's year to date, right? So first 6 months of this year to date, about 50% of those businesses are selling through, and the multiples are actually increasing. So you still need the right type of business to be selling through at that range, but obviously there's less competition and it's more of a seller's market. So we had two deals recently. One was listed at 1.5 million, one was listed at 1.1 million. The 1.1 million deal sold in a week. So we got a letter of intent in a week. We all agreed to terms, and then it took about 2 months to get that deal done. The second deal, the $1.5 million deal, was on the market 3 weeks. We had 9 buyers interested in that, ended up with 2 buyers competing with cash offers, very close to list price, very aggressive terms. So a lot of the cash was up front. A very small percentage of the sale was actually held back for training and handover. I can explain what all this means as we go through. But the market there is very hot. And above the 5 million range, it's tough to get a business to that level of revenue and net profit. So there's always a market above that 5 million mark because that's more institutional buyers that have to deploy capital.
I see. Let me just sum up this information that you gave just now. So basically what you're saying is if the business under $500,000 of evaluation is pretty hard to sell because a lot of sellers and not enough buyers interested in this kind of businesses. And yes, you're saying that only 2% of all deals are closing, right? Like
under that $500,000 range.
Yeah,
yes.
Under that $500,000. Yeah. If you're selling business or $500,000, way better chances of selling it. But still what you said is that like if you're selling even over $5 million, there is like 50% of chance that it's not going to happen.
Over 5 million, it's actually increased. The specific range of about 50% is 1 to 5 million range. So that's the first half this year. So for the first 6 months of businesses that have listed to sold, so they may still sell because they may have been listed 2 months ago. It just takes a little bit longer typically for a larger deal to happen and to close.
Okay, I got it. Obviously, we're going to jump into how the businesses are being evaluated. But before that, I wanted to ask, what are the main reasons why buyers don't want to buy business after they check it out, they like saw numbers, and what happens next? Why they decline the deal?
Sure. There's been quite a significant change in the past 2 years. So 2 years ago, we literally had buyers with a lot of capital saying anything that sells on Amazon, any products that sell through Amazon, we'll look at and chances are we'll buy. So that in the early days, they were snapping up everything because it was a newer asset class, basically. What we're seeing now is a lot of buyers, even if they're looking to buy multiple brands, they're seeing a lot more deals. So when you start lining up 50, 60 options in front of someone, then they start to see a trend of what's important, what's not. So I'll go through a couple of the things that we're seeing as the main key drivers of whether a business will sell versus one that won't. The number one thing actually right now is brand. So this is becoming more and more a factor. So somewhere along the way, there was advice given out that you should brand your products, which makes a lot of sense, right? However, most brands are a white label product, and maybe they've only got one product. So they'll call it XYZ brand or Acme, whatever, but it'll just be one product. That's not really a brand unless you've built something proprietary about the product itself. If it's a glass and you're just calling it Acme glasses, but I can get this glass anywhere, that's not really defensible. So the brand, for a brand to really matter, it doesn't need to be Coca-Cola to be a brand. What it really needs is some core products that serve the same customer. So think about sports or baby niches, sports niches, hobby niches, where you can have one product that really takes off and then develop a product range, 5 to 10 products serving that same customer. And you have a good brand that relates to that niche. So that's a brand that buyers are becoming more interested in. The second thing is the net margin. So we'll talk a little bit about how to figure out your net margin or your net profit shortly, but if you take your net profit, divide it by your trailing 12 months net profit, divided by your trailing 12 months revenue, and multiply that by 100, that'll give you your net margin. So what we're actually seeing on businesses listed for sale have quite a low net margin. However, the businesses that are selling have a net margin of around 30%. So it's quite common, it's actually average for an e-commerce business to have around a 20% net profit margin. So you really need to be extraordinary for buyers to want your business. And if you think about it from an ROI perspective, especially if someone's using their own cash to buy the business, if they're looking at one business that has, say, 11% net margin, one has 20 and one has 30, everything else being equal, of course, you're going to go for the 30% net margin. It gives you more cash to defend against competition, to reinvest in creating more products and making the brand more defensible. So they're the things that are really driving value right now. The other things that are making a business sell through is the product range itself. So as I mentioned, you really want more than one core product doing most with the brand, but you also want diversification across each product as far as revenue. So if one product is 90%, 80, 90%, 95% of the revenue, that's risky, even if you have accessory products. So buyers are typically steering away from a brand where it's just one product that's driving most of the revenue. And again, if you think about it like an investor, that makes sense as well. You want diversification. Also, this isn't as much a factor, but it's a nice to have, is outside of Amazon income. So you can build outside of Amazon income, but it really needs to be above 30% of your revenue to matter. So it's quite an effort typically to get to that stage because Amazon drives so much sales internally. So above 30% of revenue matters outside of Amazon as far as a multiple increase, and also whether a buyer would pick your business over another. And with the product diversification, you don't really want one product being more than 20 to 30% of your revenue. So there's a couple of benchmarks to use. And also just one more thing, the recurring nature of products. So if you have, it doesn't need to be all the products. We've seen in the home and kitchen category, this is quite often we see this where you have one core product and then accessory products that are reuse items. So you need to buy these products over and over again to fit with that product. So that's a way to get more recurring sales than just a one-off sale. So if you have anything that's recurring, subscription, subscribe and save, this will also make your business more attractive than another.
So let's, okay, one more time. I will sum up everything you said. So basically, first of all, the age of business should be like 2 years up to 4 years just to have enough history and enough developed business so it can get a lot of like enough margin, right? So
Yes.
the more margin you have, the more numbers you can get at the end. Okay. Amount of products, more than one, obviously. And recurrent products are like the good when it comes to evaluation. Great. So let's talk about how do investors evaluate how much they're willing to pay for the business.
Sure. So typically we have two categories of buyers. There's financial buyers and strategic buyers. So the vast majority of the market is a financial buyer. So what they're literally looking at is the last 12 months revenue, last 12 months net profit. And they'll use that last 12 months net profit to come up with a multiple they're willing to pay for that net profit. And they'll look at the history of the business, they'll look at diversification, they'll look at the margin as to whether they'll buy this business and how much they will pay. So typically we'll come up with a valuation based on the market data that we have. So we'll look at your business compared to all the other businesses that have sold. So we can put together comparable data to show buyers that this business is worth this because here's 10 other sales that have been done just like this business or similar to this business. But it's always up to, we can put all that together, we can come up with a list price, but ultimately you don't know what a business is worth until you get buyers making offers, cash offers for the business. So there is a gap between what we could list for and what we could sell for, and the market constantly changes. But essentially that's what a buyer's looking at is your trailing 12 months net profit, and they're also looking at your net margin with that. And then they'll come up with a multiple of what they're willing to pay. And depending on the size of the business, if it's under $500,000, that could be anywhere from 1.5 to 2.5 times the annual net profit. If you're in the 1 to 5 million range, list price range, that could be anywhere from 2.5 to 3.5, maybe even 4 times net profit. So it really, there's quite a big range of what a business could sell for. And, a lot of factors go into that.
Okay, so let's say I have a business making, let's say, I don't know, 500,000 net profit a year. What would be the multiple for me, just to get the picture here? Sure.
So if you added that with a one brand focus, so if that's one brand doing $500,000, it has the product category around that one target market. So it's in the baby niche. So you're selling to mothers doing $500,000 a year. All your products are fitting to that target market. So mothers are buying all of your products. There's some recurring nature. None of those products are more than 30%. And you have a 25 to 30% net margin on your business. And the business is in a growth phase. No one wants to buy a declining business. So if the business is growing, this business could sell, and it was just on Amazon, this business could sell anywhere from 3 to 4 times that net profit. So you're looking at $1.5 to $2 million this business could sell for. So that would be quite a nice exit.
Yeah, that would be quite a nice exit. So basically, if I'm making, let's say, $40,000 in net profits monthly, it's basically $500K yearly. So I can list it for $1.5, $2 million and can close the deal. Nice. And if I want to do that, I just go to the broker like you are, and then you're helping me with all the paperwork, with all the evaluation, finding clients, stuff like that. Okay.
Yes, correct.
Okay, sounds good. Sounds good. Can you tell more factors that could affect selling price, or that can just cancel the deal?
Yeah, absolutely. So we've actually had this quite a bit recently. We had a string, I think it was about 3-4 deals that we're about to take to market had this exact thing happen. So one of them we're still going to market. 2 of them we're waiting a little bit. 1 we're just going to have to wait and see. So as most Amazon sellers would know, the biggest risk of selling on Amazon is the chance that Amazon could actually suspend a listing. They could suspend your whole account. They maybe take some reviews away from you. So this is a problem when it comes time to sell, and it's something that we don't really have much control over, other than making sure you have a solid business. You're not doing things that we were doing 2 years ago that aren't acceptable now. So really aggressive review generation and things like this can reduce the chance of this happening. But occasionally there can be a customer complaint. There could be a competitor that comes in and puts some fake drama on your listing, and that could actually take the business down. So if your income is interrupted at any point before selling, this could actually stop us from taking the business to market. It's very frustrating for us and for the sellers, but that could actually impact it. Also, during the selling process, if you have a letter of intent, which is a letter saying, this is what I would buy this business for, the buyer still needs to go and do due diligence. So we're not sold at an LOI. So we need to see the business. You need to really focus on running a business, growing a business during that sale process, right up until that money clears escrow. So even in the handover process, if anything was to disrupt sales, that could delay the process. It could also make a buyer pull out of the process because they'll go find another business. So that's the biggest thing I see as a problem when it comes to selling businesses. And often we need to take a business off the market and readjust and come back later, is when the business is in steep decline or they have problems with the listing and the income along the way. So yeah, that's something to really be mindful of.
How much time does it usually take to do this due diligence, like from the point that I'm interested as a buyer to the point, okay, I'm gonna transfer the money now?
Sure. It depends on the size of the deal, but it also depends on the buyer. So we've had deals close within 2 to 3 weeks. We've also had deals take one deal. Actually, that's not diligence. So diligence can take 2 weeks to about 3 months, depending on the buyer type. The transfer and handover, however, depending on how you're transferring the assets in the business, can actually take a little bit longer. We have one deal right now that's at the final stages, hopefully, but it's at about the 8-month mark. So the seller and the buyers have put money into escrow, everything's signed. We've actually had a delay with transferring the assets through Amazon, and now it's an 8-month process. It's very frustrating for the buyers. It's frustrating for the seller. They want to get this transferred. We want to get the business transferred, but there's been a few hiccups along the way. So the point of getting a signed deal money into escrow to you actually getting paid out of escrow can be quite a lengthy process. Best case, that could be a week from escrow going in to money coming out, right through to this 8-month saga. If I was to do that deal again with what I know now, we could make that a little bit shorter, of course. But sometimes you just learn on each deal.
I see. So basically, it's not like, okay, now I have this business, it's doing really well, I want to sell it, and in 2 weeks I will sell it, and no one notices like in 2 months it's going to be dead, right? So it's,
yes.
I mean, it takes time to like evaluate everything, and I would still need to take care of the business so it would continue to grow. Yes. All right, I see. Great. Can you tell more about how the process is starting? Like, how do you, like, what kind of reports do you need to see, like when you want to evaluate the business, if you want to list it on your website, if you want to offer it to clients? What the first steps are you doing with new business?
Sure. So once I talk to a seller and we talk about their business, I think, okay, well, if my business was worth this, I'd be happy to sell. The next step is always getting the financials across. And, Amazon sellers in general, and I don't think this is unique to e-commerce or product brands, but a lot of businesses just don't have their numbers together. So even if you have your numbers done for taxes, so if you've got, say we're in middle of 2018 right now, if you had your 2017 taxes done, that's still not what you're going to need to go to market and sell the business. Like I mentioned before, the trailing 12 months is really what a buyer's looking at, but they'll want to see the past 2, 3, 4 years of history in the business to see year-over-year trends. How is the business actually progressing over time? Is there a decline? Is it growing? And typically those books need to be produced at the time of wanting to go go to market. So we need to create the profit and loss statement in a way that reflects operating profit, or SDE, which is seller discretionary earnings, to come up with your net profit. So you can add back things like, well, the way we do this is your revenue, so your top line revenue minus cost of goods sold. And we do this on an accrual basis. So as the goods are sold, it's calculated not when you buy 100,000 of inventory. It doesn't come off that month. It's as you sell those products as a total cost of goods sold. And then the expenses of the business, so all your Amazon fees, everything it costs to make those sales each month. And then if you have any staff that are helping you run the business, PPC costs, these type of things are all included. What can be added back into your bottom line to give you that SDE number is salary. So if you're taking a salary out of the business, and if you're doing any training, so paying to come to Amazon Forum and hang out with us, you could add that back. Any sort of traveling you do for other conferences, if you travel to China to visit your warehouse, that could be an add back as well, unless you need to go there every quarter to keep the staff in line or something. Maybe you'd need to include that. So those figures can be added back. If you're running car expenses or personal, not 100% business related expenses through there, and also corporate tax. So whatever your entity is paying in tax can be added back, because the new buyer has their own entity, their own structure. So we put the raw number there. We say this is what the business is generating in net profit. You can do what you want with that. So that's how we calculate these numbers. Typically, actually right now, we refer clients to a bookkeeper of ours that has deal-making experience. So they're expert at coming up with SDE for Amazon-based businesses, and they understand e-commerce and Amazon very well. So yeah, that's what we need. That's step one, which can take some time.
All right, so I will just again sum up with come up with a simpler form, I believe. So basically, okay, what you're looking at is you're looking at a profit and loss statement. Yes. Is it like standardized document, or is it like I can do it whatever I want it to do?
Yes, it's best to use software that links to your bank account. So QuickBooks Online, Xero are very common. There are some online tools that you can use, but they don't necessarily add in all of the expenses. So we're typically needing to add in more expenses than a service like a Hello Profit or something would spit out the numbers. Yeah.
Okay, so you were using those services, and but still I can do it with Excel spreadsheet, but it's gonna be way harder, right?
Yes, and the piece that's hard is not necessarily putting it together. So you may be able to get a VA and put all the numbers in very easily. The issue that we have is that if you come through us, we'll be vetting those numbers and verifying everything on the front end. But more importantly, even if we check things out and that's cool, you've still got to pass diligence with a buyer. So once that LOI comes in signed, yes, we've got a great offer, let's do this deal. The buyer, depending on their experience, their team, they're going to want to verify everything that you've said about this business to make sure it's real. So it's on us at this point as the business owner to verify all of that information that we've put into this document. So the reason that QuickBooks Online or Xero is so much better is it's linked to your business bank account. So it pulls in all the expenses, all the revenue. A buyer can get access to QuickBooks and verify everything. So it gives them a higher level of confidence that this is actually what the business has done. And, they're trying to find any piece that's missing. So they're connecting the dots. And if you just have an Excel spreadsheet, you're going to need a ton of information to prove what you've put in that spreadsheet. So I wouldn't advise it.
Sure. We are doing our bookkeeping in, how is it called? I forgot. Not in QuickBooks. We're doing it in QuickBooks.
Yeah.
I'm just asking for the guys who are, a lot of them are doing in Excel, and they're thinking that it is okay. But at some point when you want to sell the business and you have like 2-year history, it's a lot of work to transfer all the data to QuickBooks or whatever, and some parts of it can be actually missing, right? So
absolutely, yeah. And even while you're running your business, even well before you're thinking about selling the business, you really need a way to understand how your business is running. So a lot of us will use cash-based accounting, money in, money out, to figure out if we're profitable each month. That doesn't take into consideration what it's actually costing you to make sales, what profit per product, per channel you have, and also doesn't help you with any inventory planning. So you really want a partner to help you with that bookkeeping side that understands inventory-based businesses as soon as possible. So as soon as you can, put someone on to help you with that is the best way to do this. You want an up-to-date profit and loss for the trailing 12 months every month, and you want a cash flow statement as well. So you want to know how many assets, what your cash position is, as well as knowing what the business has done over the trailing 12 months. And you also want a projection, them to help you with a projection of how much money do you need to reinvest in inventory to make sure you don't run out of stock. Right? That can be the biggest killer of forward momentum, is not only from making the cash, but also you can lose rankings and things if you run out of inventory. So it's very painful.
Yeah. So basically the best time to start doing accounting is like right now when you start the business, right?
Yes, absolutely.
Actually, we have this interview is about like financial accounting and stuff, and we have our course launched like at 8th of August, and I want to do small like special offer for guys who are listening to us right now. So, ребят, те, кто, значит, у нас это интервью приурочено к запуску курса по финансовой грамотности на Амазоне, по составлению правильных отчетов, чтобы вы могли подать свой бизнес. Поэтому, если вы хотите получить шаблон отчета Profit and Loss, о котором сейчас говорит Coran, вы можете воспользоваться ссылкой, которую сейчас скинут в комментарии к этому видео, и вы получите и пример отчета, и еще 20% на курс по финансовой грамотности, по правильному ведению финансов на Амазоне, чтобы вы знали, как у вас вообще дела обстоят, зарабатываете вы деньги или нет. Поэтому переходите по ссылке, оставляйте заявку, получайте отчет, смотрите, настраивайте для себя. Okay, thank you, Coran. That was just small advertising pause for our guys.
I agree.
All right. We talked about a lot of, for a lot of people, like new information here. So let's keep some time for process all of it. And I have for you like maybe more fun question. What was the biggest deal for you in your career as an Amazon broker?
Right. So right now we're in the middle of a $10 million deal, which is quite exciting. We're working on the preparation side of some $20, $30 million plus deals right now. So It seems like every deal we do, we start doing bigger and bigger deals. So nice. My goal, however, personally, is to be involved in a $1 billion transaction in one deal. So yeah, I've got a way to go.
Wow, great. Nice. And do you have any clients from our community or from Russian-speaking community?
Yes. Yeah, we've started preparing for sale with a number of SalesHub members as well, and from the Russian-speaking community. So we're in the middle of preparing a couple of those sales, and also we've been doing exit planning with a number of community members of your group. So we're looking at how best to plan for a sale, even if they're not ready to sell right now. And this is one of my favorite things, actually, is to help people brainstorm how to prepare their business for a future exit. I think 95% of people I talk to each day, each week with a business that they'd like to sell, most of them are just not ready to sell for net profit, net margin reasons. Maybe they're not at the exit number they're looking for just yet, or a combination of things. So yeah, we usually planning 6 to 24 months in advance of selling their business.
Let's say I want to start a new Amazon business right now, and I want to start it considering selling it in like 2 years or 3 years, what would be the best niche with best multiples to start?
Sure. So we have been tracking categories historically, and the most amount of sales we saw in 2017 were in home and kitchen. However, I wouldn't recommend starting in home and kitchen with the view of selling for a higher multiple. That's just the most transactions closed we've seen publicly have been in home and kitchen. What I would look for, however, is when you're doing that discovery phase, obviously doing your course to figure out what products to sell. Once you find the product that's selling, focus on that niche and say, how can I create a premium product in this niche? Buyers are really interested in net margin. So even higher priced items, it may take you a little bit more to get traction and get into those higher priced items. But maybe you find a $30, $40 item you're selling retail, but in that niche, so the mum's niche, you can sell a $50 or $100, $200 product to that same target market. Your margin will be much higher on most times on that larger priced item because there's less people that can invest that much. So take the cash flow that you're generating to get that first product going to boost your margin. And you can do this by creating unique products, defensible products, patented products. You can look at products that you could crowdfund into that target market. So that's what I'd do. I'd use that as a proving ground, but then keep reinvesting that cash flow that you're making, the free cash flow, the net profit, into making more products for that target market once you find the one that is really working for you. And then expand that as much as possible. Typically, you're reinvesting for that first year once you figure out what's working. And that could take you 6 to 9 months to figure out what's really working for you. So by having a longer term view and being able to reinvest the money that you're making, if this is only, of course, if you're looking for a sale in 2 to 3 years, for a big exit, for a nice exit, this is what you should do. If you're just looking to replace your job income, that's a totally different thing altogether. So if you have other income and you're wanting to just build this for a sale, that's what I would do. I'd put everything back into it, make sure it's growing, and make it as robust and highly profitable as possible. And then if it's around one target market, highly profitable, a nice looking brand, that could be very sellable in the next 2 to 3 years.
I see. That's really great. Thank you. So let's say I have 1 million in net profits per year, and but the margin is quite low. Let's say 10% so I'm making like more than 10 million per year revenue. Yeah. Can I actually sell this kind of business, or it's not really interested for buyers?
Sure. So as businesses get larger, the net margin will go down. Yeah. So absolutely. We have a deal right now we're working on. They do 15 million in, well, actually it's going to go up a little bit, but 15 million in revenue and 2.5 million in net profit. And we're still looking to go to market with this business. So this is a larger business, and there's reasons why that net margin is lower. So, but at that, 10 million at 10%, you still really want to get higher than that if you can. So it's not necessarily unsellable, but that's quite small to have a net margin of 10%. Yeah, so you really want to push that up as much as possible. So you could look at what that would tell me if I was looking at a business that had 10 million in revenue and 10% net margin. There could be a couple of things happening. One, they could be aggressively launching new products, and they probably would be to get to that 10 million in revenue. So they're probably reinvesting back a lot in the business and new product lines, new product launches. They could have a lot of one-off expenses that we could actually add back. So if it's a one-off expense and that's never going to happen again, you can add that back to your net profit. So maybe a way to edge that up a little bit higher. But what I would say is, are you done? Do you think you're done growing the business aggressively? And then I would optimize for net profit. So you could go across the product range and see which individual items are the most profitable, and you could cut the things that aren't profitable. As long as you're not taking out 80% of the revenue, you would get someone to help you look at the business and say, where are we leaking margin? or where are we losing money here, and how can we prop that back up for a 6 to 12 month period, and then go to sell the business.
And let's say we're making a deal with you, like we're working on it, and will you actually help me to figure out the way of selling my business with higher multiple? Like, are you like the guy on my team, or you are the guy on buyer's team?
Yeah, that's a great question. Thanks for asking that. My background, like I said, I've been on both sides of the deal. And what I think is the biggest opportunity and what we focus on most is working with our sellers. So we are more sell side than buy side. So we will work with you, and I'm sometimes a little too honest with how things are, but I will always tell you where you're at and what I think about the deal. So if we're not at a multiple that you're happy with, I call it the hell yeah number. You need a hell yeah number, and we want to be shooting above that. So ideally we want the bottom line number to be hell yeah for you to sell, and then we push to sell much higher than that if we can. So it's a process where we work together to figure out what's best for you, and then we match that with what buyers are looking for, and we position the business for that successful exit. So yes, we're very much on the seller team.
Oh, that's nice to hear. So Coran, let's say we worked with you, but we couldn't sell the business for any reason. Let's say margins are not there, something like that. Can we do something to sell this business, let's say in 1 year or in 2 years? Or this business is finished, I need to start the new one, and I can forget about this one forever.
Sure. I think we, as business owners, we have a very binary, a yes or no approach, 1 or 0 approach to things. So if I would say the business is not sellable currently, or say we take it to market. So this has happened recently, actually, with some friends of mine. We've taken the business to market. The market has changed very quickly in the last 3 months, 6 months. The market has moved really fast. And so I'm telling you what's live now. It may change again, and it probably will change again. So say we go to market and we can't sell the business. Depending on why we can't sell the business, you may look at coming back within 6 to 12 months, or you may look at taking the profits that you're making from this business and reinvesting and making the business what it needs to be to sell. Or you could look at, well, if you're making good net profit off this cash in your pocket, you may just want to keep it running. So even in some businesses that are in decline, the owners, for whatever reason, don't actually care. They think, well, I'll just keep the cash in my pocket, and if we turn things around, great. If we don't, I'll just keep the cash. So there's that option as well. You don't have to sell to get a good return on your time that you've put in building up the brand.
All right, thank you. So what I was thinking about recently is that, so what you're saying that if the business is generating income outside of Amazon, it's more valuable, right? The multiple will be much higher if the revenue from outside of Amazon is more than 30%, right?
Correct.
So basically buyers, business buyers, they looking for businesses. They basically don't like Amazon, right? They don't like Amazon businesses. They're looking businesses like that making money outside of Amazon. Is it correct?
It depends on the buyer. So anytime I think I read this somewhere, some military guy has this saying that 1 is none. Have you heard this saying?
Yeah, sure.
So one revenue source is, to some buyers, is 0. So whether that's Amazon, whether that's your own website, whether that's your email list, you could argue that your email list you have more control over than, say, Amazon. But whenever you have one income channel, it's scary. It's a scary proposition. With Amazon, a lot is out of your control. So some buyers, we have a split. So there's some of the larger, more established business buyers, private equity firms and the like, that I'm meeting with here in Chicago, are expecting businesses to be more diversified, longer history businesses. So for them, they're kind of new to the Amazon ecosystem. However, there are a growing number of strategic buyers, private equity buyers, financial buyers that are looking to buy Amazon-only businesses. So if they've already gone through the process and they understand Amazon, they could actually be very interested in an Amazon-based business. However, if you had two businesses side by side, great brands, but one has, say, 50% its revenue coming from its own website, email list, and the other has 100% from Amazon, everything else being equal, the one with 50% revenue split would be worth more and would have more buyers potentially interested in it. But it also depends on the buyer themselves, what their advantages they bring to the business. So we have some international brands, product brands right now that are looking for Amazon-based business brands. And the reason they're looking for this is the products are proven. So you can start on Amazon, prove that the market loves your products. You solve a real problem for that target market. And then this product could potentially be launched into thousands of other retail chains around the world. So right now, I read a study recently that of all retail sales, only 20% worldwide is e-commerce. And in the US, for instance, just under half of that is Amazon. So it is a big piece of the market, but it's not the whole market. There's this whole world outside of Amazon and online sales. So these businesses are strategic and they're looking to take these products, put them into their distribution network. And that type of buyer is very interested in an Amazon-only business. So like everything with business sales, it depends.
Sure. Great. Thank you for this answer. Okay, so I have the final question for you for today. So a lot of Russian, Ukrainian guys, they're using a lot of gray and black hat stuff that like in terms of reviews, in terms of ranking manipulation stuff. How these kind of things would affect my evaluation, and how do you actually like know if it was there at the first place if I'm not going to tell you?
Yes.
Are you going to notice it?
Sure. This is a great question. Everyone's taking notes, I'm sure. So the correct answer for this is, while I don't support any grey or black hat tactics, it can be a great way to rank your products and make some income quickly. So I would take that income that you've made that way and make a business that is less dependent on grey and black hat tactics. So we can spot grey or black hat tactics pretty quickly. Reviews is one of the easiest ways. If the business hasn't been around that long and they have a lot of reviews and you read the reviews, you can kind of get a sense of what's happening. We also have some internal tools that we use, but more importantly than us seeing what it is, it's the buyers. So we have some buyers right now. A couple of groups have raised a lot of capital just to buy Amazon brands, Amazon-based brands, and they have a whole team of consultants and experts looking at every individual piece of an Amazon-based business. So the chances of you, if you don't mention it up front, getting found out are very high, and that, best believe, that will kill a deal faster than anything else. So what we actually suggest to our clients is to be upfront and say what they've actually done to rank the products, what they do continuously to continue ranking the products. And some buyers will be okay with the grey hat stuff, some of them will not, but it's better for us to mention that up front and get them on board with the deal as opposed to hiding what we're doing, and then that could kill the deal later. Even if we're in the process of handing over and something is found out, that deal can be unwound. You'll lose any chance of actually selling the business. So one of the easiest ways to, I guess, to prove that you're not doing grey or black hat stuff is longevity. So how long has something been in selling for? What's the growth trend over time? It's very hard to do a black hat technique and stay in business for 3, 4, 5 years. So that's one reason why age is valued very highly in a business transaction, to see the full history of the business. Does that answer the question?
Yeah, that answers question perfectly. And actually that you said that some clients are okay with grey hat, so they're actually aware of that and they can like say, okay, I know what you're doing. we're okay with it. We can go with it.
Yes. Yeah, and in some cases, we had a deal like this where the sellers actually walked through the buyer, their whole funnel, what they were doing. They said, here's what we're doing here, here's what we're doing there. And the buyer was looking at all this material and said, well, I want to change this one piece of what you're doing, and then I'll be cool with it. So can you change that now? And part of the handover, just won't even be an issue. Yep.
Great, Coran. It was really nice and a pleasure for me to talk to you today. Thank you for being here with us, and have a nice day in Chicago, and talk to you soon.
Great. Thanks for having me, mate. Talk to you soon.
Talk to you soon. Bye.
Bye.
Ребят, я напоминаю, что у нас действует специальное предложение для тех, кто хочет настроить свой финансы для Amazon бизнеса. Вы увидите ссылку внизу под этим видео, заполняйте ее, также вы получите отчет по Profit and Loss, который вы сможете использовать для своего бизнеса, а также буду вас ждать на курсе по настройке финансов для Amazon бизнеса. Всем спасибо за то, что были сегодня с нами, и до встречи на следующих наших онлайн-мероприятиях. Пока!